joining us right now. And, I got to be honest, folks, I got the 201k. And the 201k is with Empower. And I could go in and when I log in, they got a blinking red light.
Yep.
Stupid. Put in more money.
Exactly.
Thank you, Empower, for that. Empower keeping track of all the retirement plans for all of us at Bloomberg LP, and we say thank you. They went out and got Marta Norton to be their investment strategist. What's it like being an investment strategist where we don't care what you think May's going to be like? We're looking at a 3-year, a 5-year, a 10-year perspective. How do you write along the Empower line?
Well, I think what's really valuable to the retirement market, to I would say individual investors broadly, is making sure that the focus is on the fundamentals. I think there's so much noise out there from kind of data point to data point, headline to headline,
right,
and it can really have an emotional toll on people. And so my orientation with Empower, whether it's the wealth side of the business, whether it's the retirement business, is to understand and, aim to understand what's happening with the fundamentals and how should that drive their views.
But your charm is you were at Morningstar.
That's
and
right.
You lived the certitude of a 5-star fund that all of a sudden stumbled and became a 3-star fund. How do you get long-term investment in a select group of funds correct?
Okay, so that's a great question. And of course, I think if you're looking at the data, a big part of it is the expenses equation. If you're trying to think through kind of what's going to drive performance over time.
Did she read Balchunas's book?
You do want to keep those costs down, right? That's your one certainty in terms of what you're paying. You want to keep that as low as you can. But I also think my kind of grounding at Morningstar, one of the biggest takeaways that I had, and to your point, I grew up as an investor at Morningstar. It was the importance of an investment philosophy, having a point of view, a framework that would help you distill what's happening in the markets and make determinations going forward. If you look at kind of the most successful strategies out there, they're not successful in every environment, but they have a touchstone that they return to, and I think those touchstones are really important to navigating choppy markets.
So what is your investment outlook, your strategy for 2025, where we've had a lot of volatility here, a big, about a 20% drawdown in the market. We retraced a lot of that here, but it's kind of driven by not so much the fundamentals of company A or company B, but kind of trade policy out of Washington, D.C., economic uncertainty. So how do you guys talk to your clients about this?
Well, it's funny because back pre-election, a lot of the commentary I was putting out was that, your portfolio is not dependent on who's in Washington or what's in control or kind of how you feel politically about things. And yet we head into 2025 and it's been the year of fiscal policy. Yep. And it's been decisions out of Washington that have caused kind of the ups and downs of the market. We entered 2025 talking a lot about valuation and really concerned about the economy, in our estimation, seemed reasonably healthy, but the valuations seemed high, especially in the Mag 7. And so that was our greatest risk factor. And it seems like we've lived 9 lives since the start of 2025.
We all have, yeah.
Right? And so the valuation picture changed and then changed again. And I guess if I think back to that outlook at 2025 and where we stand today, one of the biggest changes has been where the Mag 7 is. The broad market looks expensive like it did back then, but the Mag 7 looked cheap. And that was a surprise to me because my expectation was that Mag 7 dictated the market.
Is with all your work, are we over diversified in our 401ks? Peter Lynch was really good on this at Fidelity. Are there just too many things in our 401ks?
Well, I mean, that depends on kind of how you're, if you're picking your own strategies, if you're picking your own investments within your 401k, then, it all depends on kind of those individual selections. 3 or 4 things. Paul can pick them. He's smarter than me. And the answer is we got advisors out there that are saying you need 42 things in your 401k. It causes angst and Empower. People get old at Empower over this. There is there's kind of like a retail market that follows the endowment market, the endowment-like approach where you had to have a very diversified, a healthy selection of all these various investments. But I would say the average, retail investor it's still a 60-40 split, stock bonds. It's still kind of a vanilla approach to the market. So I wouldn't say that, my impression of the average 401k investor is that they're too diversified, though I think there is that, argument that people are trying to put a lot of stuff in portfolios.
How about fixed income here? I mean, again, Tom and I talk about the 2-year Treasury at 4%. Do we That's not a bad way to make a living, or do we take some credit risk here?
So I think it's kind of an interesting market. One of the things that we've called for 2025 is a year for coupon clipping. That idea of capital appreciation coming from your fixed income. It's just harder to get behind that when you think of the inflation forces or the deficit forces or everything that kind of is putting a floor potentially under the yield curve. Now that felt like that was potentially the wrong view earlier in the year, but we're back to that situation, right? Where people are focused on the deficit and they're thinking about yields in kind of a range bound mindset rather than necessarily falling from here. I think one thing that's really important, and this has been a shift, has been thinking about as you're looking for capital preservation as an individual investor, not just going to the ag or the core bond space, but thinking about that breadth of the yield curve and having some of the shorter dated securities in your portfolio. They have a very different risk profile. The inflation risk is not the same. The rate risk is not the same. They showed that in 2022, and they've shown it since. And so I think that breadth is a really important element for construction.
How do you guys think about alternatives? I mean, it's become such a big part of the average RIA that we go talk to.
Yeah.
It's not 5% of the allocation. It's a lot bigger.
It's a lot bigger.
And I'm surprised by that, whether it's private equity, private debt, hedge funds. How do you guys think about that?
Yeah, so Empower is moving into or partnering with alts in the private equity sense. But I guess when I think about your question, I want to expand on it a little bit because I think the word alternative is such a catch-all. And it's important to define what we mean by alternative. So if we're thinking about something like private equity, I think the real case for private equity, of course, is the breadth, the broader exposure to the U.S. equity market. But I think the operative word is equity. This is equity-like exposure. And so you have to size it accordingly.
Right.
You have public equity in your portfolio.
Right.
So you have to think about that as you're looking at private equity.
Are you in Chicago or are you in Winnipeg?
Chicago.
You're deep south.
Yeah.
Okay. With Empower, thank you so much. Marta Norton, greatly appreciated. Chief Investment Strategist for Empower. We'll do this again, full disclosure, folks. Empower has a strong relationship with Bloomberg and managing Lisa Mateo's 601k,
killing
that leverage puppy. You have the Meta portfolio, right?
The ETFs, the triple leverage.
She's on the phone on Saturday to Winnipeg. More Meta. That's all there is to it.
Rolls.
Marta, thank you so much.